Welcome to Oreana's live webinar for December of this year, the last one for this year. So today we'll be talking about insurance considerations for Australians living overseas. And we're lucky to have my colleague Matthew Jones, who will be going through the reasons and benefits of having insurances, as it's one of them probably aspects that we forget really while we're overseas and working and accumulating wealth in terms of protecting our family. So if we go to the next slide, just a few household issues. So there's the Q&A button as part of the board, the Zoom webinar dashboard that you have. So if you want to have any questions, thoughts on the content, please use that particular junction. And we'll be going through the questions at the end of the presentation. And obviously there's the audio settings there where everyone will be muted during the webinar. And this is where you can choose your audio settings, like selecting your speaker, etc. But everyone will be muted for the purposes of this webinar. So I'll introduce the speakers. Matthew Jones, Senior Wealth Advisor for Oreana Private Wealth. Has over 10 years experience in financial services and brings to Oreana an in-depth knowledge of all facets of advisory, including wealth creation, risk management, superannuation, and the lot. He specializes in delivering comprehensive financial advice for expatriates through Asia and clients returning to Australia. His dual license, both in Hong Kong and Australia, makes him well qualified for this, as well as his extensive technical background. With us today, we also have Bez Efron, who's a Senior Business Development Manager for Neos Life, one of the up-and-coming insurance providers in Australia, and really gaining traction because of their fresh view on insurance and underwriting. So Bez has a 10 years experience in the life insurance industry, working in operations and business development. And he's passionate about risk protection, so he makes himself a very suitable candidate of being a panelist today. So without further ado, I'll hand you over to Matt to go through the presentation.
Thanks, Andre. All right, so thanks everyone for joining. As we approach Christmas this year, time of celebrating with loved ones, we thought we'd finish off the year discussing insurance and how you can implement a comprehensive risk protection plan for you and your family. During the webinar today, we'll be discussing the types of personal insurance cover. We've got Bez Efron here from Neos Life. They're a market-leading provider when it comes to Australian insurers, particularly when it comes to offering terms for expatriates as well. We'll talk through some of the main considerations when it comes to risk protection for you and your family and some of the things to think about, particularly for expats living overseas. We'll also go through a brief case study and discuss how advisors can assist with the planning process as well. Finally, we'll finish off with some Q&A. So when we talk about insurance, particularly from an Australian perspective, we consider it as protection, providing confidence and security for you and your family in the case of an unexpected or unfortunate accident or illness. Insurance is a tool that basically can provide cash immediately, giving you the ability to provide for your family, your loved ones, and in the unfortunate event of an unexpected death. Ensuring your income will continue if you're unable to work as a result of injury or illness, and providing funds in the event of a disability or a critical illness to provide options for you and your family. Importantly, the way that we think about it, it's peace of mind. Insurance can often be something that's easily overlooked, put off, delayed, forgotten about. It can be considered too expensive or troublesome to take out at times. However, just to rehash a few of the recent statistics that we included in an article we released recently, about 400 people in Australia are diagnosed with cancer every day. About 100 Australians have a stroke every day. 1 Australian is hospitalised for coronary heart disease every 3 minutes. And nearly 1 in 2 Australians aged 16 to 85 have a mental disorder at some point in their life. These stats are based in Australia, taken from a health research white paper by Zurich in 2018. Unfortunately, from a pre-COVID world, where obviously there's been much further health and mental challenges in Australia. We'll hear from Bez a bit later on all of this. He's a bit closer to the coalface when it comes to claims and statistics, and he's got some further information for us. Fortunately, though, through the right risk protection, you can ensure that you and your family are well protected, at least from a financial standpoint. I'll go through some of the main types of cover now, and also some of the things to think about from an expat perspective, and some of the additional features that can be included in standard insurance cover with Australian providers. So no one likes to imagine the worst, but it's worth thinking about what would happen if you were no longer around to provide for your family. Life cover insurance provides a one-off payment if you die or are diagnosed with a terminal illness. You can use this money to pay off debts, day-to-day expenses, or to invest it for your future family needs. Some of the additional features that can also be built into or tailored into these into life cover, either additional cost or sometimes built-in benefits, differing from provider to provider. Firstly, the advanced death benefit provides a portion of the death benefit before the full claim has been assessed. This can help with funeral expenses and other immediate costs. There's the indexation benefit. This is automatic increasing of the sum insured each year, which can help your benefit keep up in line with or not lose value over time. There's a suspending cover benefit. This means you can hold off or suspend your premiums for up to a period of 12 months if you're experiencing financial hardship. There's a future increase benefit where you can increase the sum insured under certain circumstances. And then there's a range of ancillary supports for our family as well. These can range from accommodation benefits in the case where immediate family members need to travel to be with loved ones. There's a financial advice benefit, which can assist in funding the cost of receiving financial advice. And there's also a grief support benefit as well for families. Total and permanent disability insurance. TPD helps to protect you and your family lifestyle if you become terminally or totally and permanently disabled. You can apply for TPD as an extension to life cover and critical illness insurance as well. This can be purchased inside or outside of superannuation. There's a few options there we'll come to later. And again, there's additional features that can be included as well. Often a lot of the same or built-in features and additional cost, similar to life cover. There's also the limited death benefit, which is available for standalone TPD cover, for instance, where a limited payment can be made if that insured person passes away. There's a specific loss benefit where you can receive a portion of the sum insured if in the instance that you cannot receive a full claim. And then there's various TPD definitions as well, ranging from own occupation, any occupation, split definition, also the homemaker definition, which again, I'll touch on a little bit later. So income protection insurance, it helps protect you and your family by paying a monthly benefit if you're unable to work due to sickness or injury. This can help fund your living expenses, such as your mortgage, school fees, car payments, while you focus on your recovery. In the income protection environment, it's actually gone through quite a lot of changes in recent times as well, particularly from October this year. So it's worth speaking to your financial advisor, particularly if you've got existing income protection in place, just to see where that is at. Further to that, there are a range of additional features that can be included when structuring your income protection as well. There's a choice of waiting period, so 14 days up to 2 years, which can be tailored to reduce premium payments or structure your insurance to meet your situation. There's a choice of benefit period as well. This can range typically from 2 years up to age 70, again, differing from each provider, but can be tailored to fit your circumstances and affordability. There's also a super guarantee benefit, which can be added on typically at additional cost, which in addition to your benefit, you can also receive superannuation contributions to continue to build your retirement benefits or retirement capital. And then there's the waiver of premiums as well. In the event that you're on claim, typically your premiums or cost of premiums can be waived. Critical illness, so being diagnosed with a severe medical condition impacts obviously you and your family. Critical illness insurance can help take away the worry of having to cover your day-to-day expenses while you undergo treatment or recover from surgery. Critical illness, also known as trauma cover, pays a one-off payment if you suffer from one of the listed critical illnesses and can often pay a portion of the sum insured if the insured person suffers a partial critical illness, such as a permanent loss of sight in one eye or is diagnosed with an early stage of cancer. Depending on the insurer that you take cover out with as well, the list of conditions covered will vary. As an advisor, we work closely with various providers to assist you with choosing the right cover for you. Generally speaking, there are usually two types of critical illness insurance available. There's critical illness standard, which offers a one-off benefit for the most common critical illnesses. And then there's critical illness plus, which is a common definition that we include with a lot of our clients, which provides benefits for an extensive range of critical conditions, and you can see here on your right, and additional options including partial payments and reinstatement. Reinstatement is often a useful added benefit, as if you're unlucky enough, you can claim on multiple claims on different conditions that are insured by the policy. So there's some of the main types of insurance that we typically assist our clients with, and clients do typically look at. Now, I'll throw to Bez from Neos Life here, but just before we do, I think we've got a poll here that we're going to run for everyone. So I might ask Andre. Oh, yep, here we go. So basically, it's a very brief poll. Just what concerns you most when it comes to risk protection. It's a multiple choice, so you can go ahead and answer that. In the meantime, Bez, I'll throw to you, mate, and you can speak through some of the statistics and further information.
Thank you, Matthew and Andre. Thank you for everyone attending and allowing me to present as well. I'll just quickly share my screen. Let me get that up and running. There we go. Awesome. So Andre and Matthew also touched on before on why so few people have insurance. And the reason for that, and unfortunately, Australia or Australians in general, we do have a massive underinsurance problem. The main reason is because we either believe the insurance within inside our super fund is sufficient and adequate, so we don't require any more insurance, which is unfortunately not correct. We think we don't need it, or we don't even like to have that conversation about it because it is a tough conversation. It's a tough thing to think about. Or the true Australian mindset of, she'll be right. It will never happen to me. I'll be fine without it. Let's not worry about it. Let me just move to the next slide. Sadly, everyone is at risk. And as you can see, cancers, heart attacks, and even accidents can happen to anyone at any time and at any age, regardless of how old you are or what type of healthy life you've lived. Unfortunately, Delta Goodrum, at the age of 18, was diagnosed with Hodgkin's disease. Both Kylie Minogue and Olivia Newton-John were diagnosed with breast cancer at very young ages of 36 and 42. And unfortunately, we lost our Steve Irwin and our Heath Ledger at very young ages as well. Now let's look at you and me. What's the probability of us being diagnosed with either an illness or an accident? Well, let's look at heart attacks, strokes, and blood pressure. It is actually responsible for one death every 12 minutes in Australia. That's 120 deaths a day. 1 in 5 men will be diagnosed with prostate cancer in their lifetime, prostate cancer being the number 1 cancer in men. In 2018, there was actually 48 cases every day with 9 deaths every day as well. Breast cancer being the highest cancer for females, 1 in 8 females will have breast cancer in their life. And when we move on to mental health, 1 in 4 women and 1 in 6 men will suffer from depression, which is actually 60% related to events or personal life events. And these are all stats, again, before the COVID, before, I guess, the pandemic and everything. And it's no doubt that a lot more stress is upon us nowadays as well. If we look at the cost of cancers, the odds for males overall is 1 in 3 will be diagnosed with a cancer before the age of 75. It's 1 in 4 for females. It's also the leading cause of death for males under the age of 65. Surprisingly, well, I don't know if it is surprisingly, case numbers have increased by 200% in the last 25 years, while the population of Australia or Australians have only increased by 30%. So unfortunately, a lot more people are being diagnosed with cancer every year. Fortunately, the survival rate is increasing. So more people are living longer lives with the benefits of treatment and advancement in technology. Pharmaceutical companies spend up to $2 billion a year developing new cancer treatments, which is fantastic. But however, most of these new technology and the best treatments out there are not supported by PBS. And you can face bills up to $5,000 per month to seek the best treatment there is out there. The average cost of treatment is about $125,000. And again, unfortunately, the latest drugs and treatments are usually not covered by the Medicare scheme or anything like that. I guess moving on to your income, 83% of people cover their car, but only 31% of people cover their income, which is ridiculous, right? If you look at obviously your income and how much you'll produce over the next 5 years compared to what your car is worth in the next 5 years. 20% of people default on their mortgage due to an illness or an accident, right? So selling off their asset because they obviously don't have any adequate savings or any protection in place. Research also shows that 38% of people would have to sell off an asset if they weren't able to obtain an income for 1 month. This increases to 58% if you had no income for 3 months. So unfortunately, what we're seeing is people selling off their assets to cover for their income or their treatment. If we look at our own claim statistics at NEOS and industry-wide, the number 1 claim is income protection, and the number 1 claim of that is injuries. Second being cancers, and third being mental illness. But mental illness and musculoskeletal, in particular back pain, is on the rise. Mental health claims are at record levels every year. If you look at mental health claims and musculoskeletal claims, they do take up one of the highest payments in income protection and TPD. Critical illness is obviously cancers, but another interesting fact is with life insurance, 30% of all our claims are terminal illness, right? So unfortunately, being diagnosed that you're not going to survive in a year or 2 time, life insurance, unless straight away with us, would pay out if you're diagnosed to pass away in the next 2 years. So you can obviously make the most of that money and enjoy your life before the event did happen. Now, why do people need insurance? Matthew touched on this before. In 2019, the industry paid out $12 billion of claims to over 100,000 clients. If I break that down, that's $33 million a day to 279 Australians a day. These funds were there to help people with bills, mortgages, medical expenses, allow you to recover and concentrate on your health and not worry about bills or any financial stress, and also allow your partner potentially take time off work, not worrying about, putting food on the table or meeting bills at the end of the day. So really just focusing on getting better. Now, insurance is extremely important, and there are a vast range of providers out there. Now, why would you consider NEOS if you're living in Hong Kong? Well, Australia, first of all, the Australian products are amongst the best in the world. We actually have the best rated products in the world. They include the most amount of definitions and the highest percentage of payments. With NEOS, if anything was to happen to you, we're one of the only insurers in Australia that don't require you to return back to Australia. So you can continue to receive full treatment in Hong Kong if you like to, without any requirement to return. Our application process is one of the fastest in the market with the least amount of questions as well. On average, our tele-underwriting team completed an application within 13 minutes, where the industry average is about 35. We also have one of the largest medical limits in the market, meaning you don't need to go see a doctor for a report or need to go see a nurse to do bloods or medicals. We also have one of the highest rated highest rated products in the market. And in this industry, I guess in the Australian industry, which is one of the best rated in the world, it's one of the highest rated covers in the world as well. Also, our cover is worldwide cover. So fully covered, covers COVID if anything happened to you, and 24 hours a day. If I look into some inbuilt benefits that might be applicable to your circumstances, if you do have any kids, any lump sum cover with NEOS also includes $10,000 child benefit per child. So 3 kids would be $10,000 per each one. We're also the only ones in the market with a rate guarantee. So there'll be no nasty surprise on renewal with increases. All our projections are promised for the first 3 years. If you ever do lose your job or become unemployed, we waive premiums for up to 3 months without the need of paying anything, and you're also fully covered. Also, if you're looking to start a family, if your partner does, or if a person does take time off work to go on maternity leave, we also waive 3 months of a premium on lump sum cover. And again, our cover is worldwide cover, which has also guaranteed renewables and guaranteed upgrades. So if the cover definitions do get better over time, we automatically update that and pass it back to anyone with a NEOS contract. Finally, I'll touch on every year, 2,000 clients are surveyed about their insurer, about their experience with underwriting, claims handling, and service experience. Year on year, NEOS has been rated #1, and quite a substantial lead over to #2. And this is just because we use the best technology, using a common sense approach, and obviously trying to get the application done for you as quickly as possible. That's it from me today. I'll hand it back over to Matthew, but I will stay around for any questions.
Thanks for that, Baz. Quite insightful. Just while I'm bringing my screen back up again, we might share the results of the poll. Okay. So we got the poll. Okay. So looking at the poll results, actually quite evenly split across leaving unpaid dependents or debts for dependents, costs for ongoing care, and loss of income. So I guess the outtake there is that there's no one real driving factor here, and it is really important to consider having a comprehensive insurance plan in place for you and your family, at least to alleviate some of the stress of the unknown or the unexpected and some of these risks that you may be exposed to with your family. See if I can work this out. Okay, if I'm back onto the screen now. So I guess when people, and I guess it's just further to what Bez was speaking to there, when we reconsider insurance, it's typically when you're having your first child, you're buying your first home, if your spouse or your partner urges you to look into getting cover, or unfortunately, it's commonly when someone you know becomes very ill or disabled or unfortunately passes away unexpectedly. That they're some of the main drivers that often get people to think about their insurance. But when should you consider at least considering or looking into your current insurance cover? If you have a partner, a family, or dependents, it's really a responsibility to look at your current risks and your insurance. If you have a mortgage or any other considerable personal debts, if you have a business or you're self-employed, if you'd need money to live if you're unable to work, or if you don't have adequate savings to cover unexpected expenses, are obviously some of the things that you should be thinking about. So often Australian insurance can be structured through superannuation to either create a tax efficiency or to ease the burden on cash flow. Premiums for these types of cover offer a rebate within superannuation for premiums, which can often reduce the net cost to you as a client, which is quite an effective tool. Further to this, some of the funding for your premiums can be funded through superannuation as well. In this case, it can often ease the cash flow burden of taking out insurance. Rather than holding off, you can get in place the cover that you may need now, and utilising superannuation as a tool to fund some of those premiums. Not all insurance can be held through superannuation either. Trauma cover is one, due to the ease of accessing a claim from trauma cover. You don't need to meet the full disability. This is often good for a claim, but it may provide issues if this cover is held within the superannuation environment. Further to this, there may also be tax benefits on claims of holding insurance personally, or estate planning matters as well can often be a simpler process rather than having insurance structured through super. So it is a conversation to have with your advisor, and we can obviously assist you on this front. And then there's linked or standalone cover as well. So linked lump sum covers such as life, TPD or critical illness are often packaged up and linked. And in these cases, you can create cost efficiencies across these covers, which can, I guess, give you access to a comprehensive insurance plan at a lower cost. Total and permanent disability as well has a few different definitions, which I alluded to earlier for meeting a claim, and it's important to get the right definition for your situation. Just going down the list here, own definition or own occupation definition is the most defined form of TPD cover. It's underwritten for your specific role and occupation that you're engaged in at the time of cover. Can provide the most certainty of claim. Any definition or any occupation definition as a result of disability, the insured is unable to carry on work. This is any occupation that's reasonably suitable for your education, training, or experience. It's a broader definition, and obviously not underwritten in a similar way to own, but can come at a lower cost, or alternatively, you can look at structuring this through superannuation as well. The split definition, this is often only available to tailored TPD cover. You can get access through providers such as NEOS. This is a combination of own and any occupation, whereby you're getting the access to the own occupation definition. However, you can look at structuring this more cost effectively or even tax effectively through superannuation without those restrictions to claim. And then finally, there's a homemaker definition. So this is for non-working or non-working partners or spouses, where the definition of claim is where you cannot normally physically complete domestic duties. So it's the most broad and I guess the most strict in terms of accessing a claim, but it is a method of obtaining TPD cover if you're not in gainful employment. So there's a few other issues and things to think about here. So having cover underwritten either financially or medically is often desirable, as it can give you certainty of eligibility of claim. It's tailored to your personal and financial situation, and again, offering the best protection for you and your family. Tele underwriting is a common method of underwriting with Australian insurers. Typically, this is a process where you go through the phone your personal statement or questionnaire with a qualified nurse, and it can be done externally while you're overseas as well. It's quite flexible. There's also pre-assessment that you can go through with an advisor. Underwriting can have a look at your situation, your medical or financial situation. And this is a method, if you're concerned, particularly when it comes to your health, You can look at multiple providers and see where you're at. And importantly, if the cover is not accepted, it's not considered a decline. Most industry super funds offer default insurance cover as well in the form of commonly life, TPD, and some cases critical or income protection. This is default cover, often without the need of underwriting. Many expats will likely have either industry super funds or employer super funds where you'll have these default levels of cover, but it is important not to fall into the trap of, I guess, a false sense of security. This cover is either sufficient or defined for your situation and circumstances. And then finally, we've got stepped versus level cover. Step premiums increase each year, while level cover can be underwritten and locked in a lower rate for longer. This can often present cost savings over the longer term and is a useful strategy if you're taking out insurance, particularly at a younger age, or you're looking at cover such as critical illness, which is paramount of importance later in life. Further considerations here to think about is estate planning and understanding how benefits can be paid to beneficiaries of your estate. Binding nominations can be made on life cover and can be paid directly to your nominated beneficiaries. It is important to understand how certain beneficiaries can be named, particularly if you're structuring insurance through superannuation as well. And then finally, the tax benefits. Typically, life policies in Australia are paid tax-free. However, it is important to understand, again, the tax implications if you are structuring some of this insurance through superannuation. TPD in particular is one you should be looking at with an advisor and understanding those tax implications. As an expatriate, further considerations to be thinking about as well. So when it comes to superannuation, premiums depleting your balance. As an expat, typically you won't be receiving contributions to your superannuation. And it is mindful to ensure that you're not depleting your balance or understanding the implication of holding super or funding insurance through your superannuation over time. Making contributions. On the flip side, there are a lot of strategies available. So insurance through superannuation can be quite tax effective. As mentioned earlier, you'll get rebates on premiums, in some cases within super, which will reduce the end cost to your insurance. Making certain types of contributions to fund these premiums, you can then also look at claiming tax deductions dependent on your situation. For instance, if you've got rental property in Australia, making tax deductible contributions, you're basically getting a tax rebate on the contribution and then again on the premium, and can be quite an effective method of funding your premiums. And then finally, a change in legislation in 2020, the opt-in legislation. Basically, if your superannuation becomes inactive or hasn't been receiving contributions over the last 16 months, if you haven't opted in specifically with your superannuation fund, you can be at risk of losing that insurance. So again, just be mindful of some of these issues or traps for expats. Territorial exclusions as well here. So some cover, existing cover or cover that you can take out with certain providers, particularly when it comes to disability, can have inbuilt territorial exclusions, which may either preclude you to a disability claim while you're overseas, or limit the claim in the case of income protection. There are providers that we've seen which will limit a claim to 3 or 6 months, whereby after that you are required to return back to Australia to continue your claim. It's worth noting that Bez did mention that NEOS don't include these territorial exclusions. So there are some providers that are better suited for expats, Australian providers. Then finally, relocation. So again, for an expat, moving around quite a lot, it is an important consideration to understand the underwriting requirements. In some cases where you are planning to relocate back to Australia in a few years' time, it's obviously going to make a lot more sense, or may make a lot more sense, to go through underwriting either once, taking out cover with an Australian provider, or again, just considering whether local based cover is right for you. Health events and other situations may preclude you from replacing this cover down the track. So it is important to think about what your plans are of the future, taking out cover that's right for you. So I've just got a case study here that I'll speak to, just to run through, not a typical claims situation, but just to understand how comprehensive insurance package can assist in the case of very unfortunate for Jim here. So Jim's a 45-year-old. He's a non-smoker. He's got life cover of $1 million Australian. He's got TPD cover of $1 million Australia. This is linked cover held personally. He's got income protection of $10,000 a month, which is equal to his living expenses in this case. Waiting period of 30 days and a benefit period of 2 years. He's also got critical illness cover, which is linked and attached to his life and TPD. And this is actually run through quoting, so it's not guaranteed, obviously, normal disclaimers, but it does give a bit of a ballpark feel for what the cost or typical cost might look like for a package like this, at around $4,200 per annum. In the case here that Jim looks at claiming, he claims multiple times. So he has a heart attack. He meets the full definition of a critical illness claim, and he receives $250,000 to cover his immediate medical expenses, and let's say cost of rehab, and those various expenses that may come up. He can't return to work immediately. He's out of work for 18 months, and his income protection kicks in, funding his living expenses while he can focus on recovering. Jim goes back to work, and unfortunately, he's really unlucky here. He's involved in a car accident, and unfortunately becomes totally and permanently disabled, thereby meeting the TPD claim, and he's paid out $1 million on that. Now, in the case of having buyback attached to this, or even a separate life cover policy, he still has his 1 million life cover in place if he doesn't make it down the track. So again, it's just important just to consider how comprehensive insurance package can protect you from multiple facets of the unfortunate. So just on the final slide here, really just the role of an advisor and how we can assist in a situation. So basically, from our perspective, a sound wealth creation strategy should be always underpinned by a suitable personal risk management plan. As an advisor, we help you understand what you are and what you're not covered for. We can go through the process of identifying the gaps. We typically use a tool or a process we refer to as a needs analysis to assist us in this exercise. And also where clients get a lot of benefit is obviously researching and helping you to research and understand your current insurance, or looking at your superannuation, understanding if you do have existing insurance cover there as well. Expert advice and planning, assistance to tailoring your cover and own circumstances. We're obviously experts in the field, provide advice in all areas. Oreana specifically, we are dual licensed, so we sit across both jurisdictions, being Hong Kong and Australia. So we see both sides of the coin there, and obviously can provide the right advice. And then finally, really just a general benefit of having the advisor having an advisor involved in your situation is obviously assisting you with obtaining tailored, comprehensive insurance packages, as well as reviewing your cover over time to make sure this stays relevant and appropriate for your situation. And then in the unfortunate event, can also assist with the claims management. I think that's it. So yeah, look, we'll stop there. I think we've got a couple of questions that have come through on the chat. So I might throw to you, Andre, if you're there.
Sure. One of them is what should I prioritize if I'm on a tight budget? You want to take this, Matt, or you're happy for me to?
Yeah.
Okay, we'll answer it together, and Bez could actually give his few cents worth as well, being on the ground, etc. It really comes down to what your priorities are. Whether it's, is cash flow a priority? Is it the amount of cover that you need, the type of assets that you already have in place? So looking at it from a few angles, if one of the things is cash flow tight, Matt spoke about superannuation being one of the options. Obviously, you'd need to also consider the fact that your super will be depleted if you are going to structure your insurance through super. But from a cash flow perspective, that's one of the things you could consider. From priorities, it comes down to, I guess, what the objectives are. Is it, also the type of insurances that's important for you? Are you a single income family, which means that income protection becomes a very important consideration, or you are in a role that would probably have traveling as an arrangement, especially if you're an expatriate. Then if anything happens to you, then a lump sum amount will definitely be something that you're looking for. So I think Matt in his presentation actually attended to a few of these measures, but in summary, really, it's really what your objectives are. Is it managing cash flow? Then superannuation might be a consideration. The type of role that you're in, what would you like to cover? Income protection might be something that's pretty important. So those are the type of considerations. Matt, you want to add, or Bez, want to add anything on that?
Yeah, from my perspective, I think you covered that off pretty well, actually, Andre. Again, just there are options available to mitigate some of the impact of these premiums, of all premiums. Utilising superannuation can alleviate some cash flow, and obviously packaging insurance through linking cover can often provide more mitigated expenses around premium costs as well.
Yeah, and I would agree to that as well. It all depends on your circumstances and scenarios, as they've mentioned. If we're looking at a claim statistic-wise, what would be claimed on most likely, it would be income protection. But if you have plenty of sick leave or cash flows on that problem, or your business could run potentially without you needing to work that much, and obviously we want the other covers, but definitely plenty of options out there.
Cool. Thanks, Bez. Thanks, Maddie. Nice. The next one here is quite an interesting one. So someone's planning to start a family soon. Is insurance flexible enough to accommodate our changing circumstances? Bez, you want to take a stab at that first, and then Maddie?
Yep. So I guess starting a family, a couple of things to be mindful of. If it is the female looking for cover, making sure that they do get that cover in place before their last trimester, so they're fully covered under their own occupation. They can apply for income protection is one thing to be mindful of. With us, if you do have a child, or once you go on maternity leave, we do waive 3 months worth of premium, so also helping out with that cash flow as well. But yes, there's definitely options there. We can always adjust your insurance after the baby's born if you need more cover or less cover, and all those inbuilt features are all in there with us.
Yeah, I guess I'd just echo a lot of that. From our perspective, it's always best to get insurance in place if you're planning for to start a family. Obviously, this should be part of the planning process. The last thing you want is to have health incidents or the unexpected pop up between now and where you're planning to take out cover to complicate that process. And again, looking at step versus level premiums, often the case with critical illness and some of the disability cover getting that in place early and locking those premiums in can offer cost savings down the line. So again, I think the underlying message here is to really at least start looking at what the options are available for you.
Just echoing what Maddie and Bez is saying, remember, if you are looking at increasing your cover because of the additional risk or underwriting that's required, then that might be another process that we need to go through. So spot on in terms of just making sure that you plan things at the outset, really. So we don't actually have to do multiple underwriting arrangements, etc., going forward. So it is flexible, but just keep in mind that if we are going to add additional cover, then there might be some additional underwriting arrangements coming through. Okay, the next question here, and we might be running a bit close to time here, but this is probably with Bez. What are the underwriting differences between local and insurance companies? Local and Australian insurance companies, I should say.
In terms of product definitions, I do know that I guess for one, AIA do have a product in obviously Hong Kong and Australia. And I do know the Australian definitions are much more lenient. There's more trauma incidents covered with Australian contract as well. In terms of processes, we do have the latest technology from the UK and US in terms of making sure the process is as quick as possible, not asking questions that don't need to be asked. Other than that, I'm not too sure on the local, which maybe Matthew could touch on a bit more.
Yeah, look, we obviously see both sides of it. We're licensed here under the Hong Kong Insurance Authority, and obviously licensed in Australia under AFSL, and depending on what suits a client, we can go one way or the other. However, a theme that I do often see is the underwriting is perhaps a bit more flexible when it comes to Australian providers. In the case of there has been a health incident and you're going through either pre-assessment or underwriting with an application, Australian insurers do have, I guess, a bit more of a focus of excluding cover related to that specific health event rather than a straight up decline. So that's probably one keynote or key theme that I've seen generally speaking when comparing the two. Yeah, that's probably the main thing. Yeah.
Okay. Cool. So if there aren't any other questions, Matt, Bez, any final notes before I close the session?
Yeah, no, look, just to thank everyone for joining us here today. We know it's your lunch break, so we've tried to keep it pretty short and sharp, around 45 minutes. As you're coming into this part of the year, it is important to think about your family and loved ones. So, look, we're always happy to have an initial consultation with anyone that wants to come in. Part of that first step, at least understanding what you currently have in place, and perhaps identifying any risks or gaps in your existing cover. Is an important first step. So that's it for me. Thanks everyone for joining. We might close off there.
Yep. Thanks, guys.
Thanks, everyone.
Thank you.